kick it off. If you are, I wanted to say hi to everybody and welcome them to our webinar tonight, Growing Beyond the White Coat, Real Estate Investing for Physicians. So we're really excited to do this presentation for all the healthcare professionals in attendance today. We're going to be dropping some great knowledge and some great information about how you as a healthcare professional can get involved in commercial real estate investing. So really excited to share this info. What I'm going to do is we're going to get started by kicking it off by introducing who we are to you. So if you're not familiar with us over at Headway Capital, I'm going to start off by introducing myself, and then I'm going to pass it on to Anam for her to introduce herself. So my name is Brian. I'm the Director of Investor Relations over at Headway Capital. Been in real estate since 2018, started off on the residential side, and like some of you in the audience, started buying residential homes one at a time, just buying residential properties, one rental at a time, putting 20% down, and then quickly got stretched really thin when I realized that I can only manage so many houses on my own. And in late 2019, early 2020, decided to make a transition over to commercial real estate, and really was looking for economies of scale. I was looking to be both on the active side and then also on the passive side. I wanted to get mailbox money, as I like to call it. I wanted to get some passive income coming into my household, knowing that I can only manage so many properties. So went down the rabbit hole of commercial real estate investing, learned about multifamily real estate investing in particular, and was off to the races after that, and started investing in multifamily properties both as a passive investor and also as an active investor, and was able to continue to grow my portfolio. And here we are in 30 years later, and doing some great things now. So I'm going to hand it over to Dr. Anam, who's going to be leading this presentation today along with me. And she's going to tell you a little bit about herself and a little bit about her husband as well, Sid, and give you some color on her background, his background, and how they got started in forming Headway Capital. Anam?
Thank you, Brian, for that kind of introduction. So Headway Capital was a company that we started back in 2017. So my husband, Sid Shabim, is the CEO. He was actually supposed to be here, so he's gonna probably join shortly. But I would like to introduce myself. My name is Anam Umar, and I'm a gastroenterologist by profession. I do work full time as a gastroenterologist, but I do enjoy, sort of in working with my husband, sort of building this company. It was his vision, which I kind of, sort of helped him expand it more over the last couple of years. It's almost become sort of my part-time hobby to look into investment opportunities, talk to other investors, and educate my other colleagues regarding investment. So Headway Capital was, as I said, a company that we founded back in 2017. The reason, the way we kind of got into it was that my husband was doing a W-2 job at that time, and I was in residency. So I was actually very lucky that I had somebody who had the time to think outside the box. And then we had capital to deploy. We were, I'm very risk averse, and stock market, cryptocurrency, other investment options kind of didn't seem the way to go for us at that time. Like a lot of you guys, I'm sure, some of you may have invested in other, maybe active or passive investors in other real estate properties, but we kind of started out fresh. And we also attended a couple of very similar webinars that were eye-opening for us. And and at that point, my husband kind of took the leap, and he just decided to quit his job and start this company, which we've expanded tremendously over the last few years. We are very, very proud of the portfolio that we have. We have very happy, satisfied investors who have become, like many of them, are very close friends. And we continue to grow, and we're looking to, at this point, we're big enough to have more people join our group, which is why, we're here introducing ourselves to you all today. So as a physician, I think I kind of relate a lot with other physicians, and I realize I realize the disadvantage that busy professionals like us have. We pretty much don't have time to think. We have a lot of us spend a lot of time making more money, but when we have that money, we don't know where to deploy our capital. And that was the problem that I kind of didn't have because I was in residency. But over years, I have realized that I feel very fortunate that I have a platform where I can deploy my capital and feel comfortable and feel that it is in good, safe hands, and I'm not not investing in a volatile market at this point. So that is one aspect of it. And the other aspect is that our company, Headway Capital, is a company that is helps. We have an open policy. We help to educate other professionals. We help to provide investment opportunities to other people. And over years, we have a lot of our investors have some of our investors have started in actively investing into actively managing properties themselves. But I think the key that we provide a platform to allow a lot of people to passively allow a lot of passive opportunities to people so that they can invest and they can feel that their money is in good hands. So that is the vision of Headway Capital, and I'm going to go on to the next slide. So what you learn from this webinar today is how real estate investment can be lucrative for healthcare professionals, the advantages of real estate investing, different strategies for passively investing in real estate, and also insights on building a successful real estate portfolio. Moving on to next slide. Firstly, we would like to go over a disclaimer. This webinar today is not for education purpose. It's only for education purpose, and it should not be considered as a legal or a legal accounting or investment advice. The information in this webinar does not represent an offer today or an opportunity to invest. And then if somebody is interested in investing, they should definitely consult their own attorneys or financial advisors and CPA for legal matters and tax purpose questions. But this presentation today is just geared for education purpose. Moving on to next slide.
Awesome. Great job, Anam. Well, I'm going to take over the microphone from Anam and start talking a little bit about how real estate investments can specifically benefit healthcare professionals, right? That's why we're here tonight, is we want to talk about how it can benefit you as a healthcare professional, how it has benefited Anam also as a healthcare professional, and also talk about the unique situations that healthcare professionals are in, because it's very different than, say, a W-2 employee who's working in corporate America, right? You have unique financial goals, you have unique challenges, and real estate can offer an excellent opportunity to help you diversify your portfolio. So you're not only relying on, say, the equities market, the stock markets, some of those more traditional means that a lot of healthcare professionals invest in. So we want to explore the advantages of real estate investing for healthcare professionals. That's going to be one of our main goals tonight. And the big question is how can it benefit you, right? How can real estate benefit you as a healthcare professional? So I want to talk a little bit about that. But first, I want to talk a little bit about the situation you might be in. Most healthcare professionals that I talk to as a director of investor relations, I'm the person who takes a lot of phone calls, and the people that Anam talks to on a day-to-day when she's interacting with investors who are interested. Most healthcare professionals have a primary source of income. They have one big source of income, and it's usually their job or their medical practice, right? There's usually not a lot of diversification in their income. And there's a lot of risk involved with having all your eggs or most of your eggs in one basket. As we've all heard, having all your eggs in one basket is risky, right? So diversification is crucial to mitigate risk and ensure that you have financial stability through different market cycles, right? So real estate can help you diversify so you can ride different economic market cycles. We all remember 2008. We see what's going on now. and real estate provides a different asset class that isn't necessarily as correlated to the equities market or correlated at all, depending on the type of investment you're looking into. So it provides an excellent diversification platform so that, like I said, all your eggs are not in one basket, right? And in real estate, what people don't often think about is it's a very broad term. When you say real estate, people assume that you're investing in, say, single family homes. You're investing in just one house at a time, one house at a time. Well, real estate is a really big asset class, and you can get diversification not only from your traditional investments like your 401ks or IRAs and different healthcare options that you have, but you can also diversify within real estate. You've got residential homes, you've got multifamily, which is apartments, you've got car washes, you've got debt funds, you've got triple net industrial, you got flex space. There's lots of ways to diversify your portfolio within real estate, within commercial real estate in particular, that can allow you to have a more recession resilient, I won't say recession proof, but more recession resilient portfolio, so that when the market cycle changes and things aren't going well, say in the equities market or the stock market, you've got these hard, tangible, physical assets that are still providing cash flow, that are still providing potential distributions to you as an investor. And that feels more comfortable than riding on something like the equities market, which is very dependent on the economy, very dependent on what's going on in the media, and very easily correlated to those types of things, which can be very frustrating, where we've seen the market shift very rapidly. So real estate provides a great opportunity for you to get risk-adjusted returns depending on what type of asset class you're investing in, and also the quality of the asset you're investing in. So I want to talk a little bit specifically about the advantages of real estate investing. I'll call these the top three. These are, in my opinion, the top three advantages of real estate investing in particular. Particularly, I want to talk about commercial passive real estate investing, because real estate can be very hands-on, and Sid and I and can both attest that you can be a real estate investor and it's not passive at all. It can be very active, especially if you're building a residential portfolio and you have 5, 10, 15, 20. I think Sid at one point, and Anam, you guys had 40 plus houses. That's not passive income. It's very active income. Even if you're paying a property manager to manage those assets, it's not truly passive, right? So we're talking about true passive income here. So one of the benefits of commercial real estate investing or passive real estate investing is you're actually getting passive income, right? So these opportunities from firms like ours will present themselves to you. You get an opportunity to review them. You get to go over the numbers. You get to go over the business plan. And then once you make your investment, your money is placed into these properties. It's passive. You're going to get monthly or quarterly distributions from these types of assets, depending on the business plan, depending on the project. And there's nothing left for you to do except for you to receive your distributions, your dividends, and then to review financial statements and monthly updates that get sent to our investors. That's it. That's as far as it goes. You can have a call with the operator, which, if you're investing with Headway, that would be us, and just to have a quick chat. Hey, how's the project going? How's the rent increases going? How are the renovations going? But it's as passive as can be. It's as close as you're going to get, as I like to say, to mailbox money. So that's a huge advantage of passive investing in commercial real estate, is you don't have to go find the properties. You don't have to go put them under contract yourself. You don't have to renovate them yourself, and you don't have to manage them yourself. That's what we do at Headway Capital. We're responsible for all the hands-on management. And you, as a passive investing partner, as a limited partner is the technical term, it's 100% passive income, which is great. The second thing I want to talk about, the second biggest advantage, in my opinion, is it provides diversification, which I think I talked quite a bit about on the last slide. But there's a lot of opportunities to diversify your portfolio besides investing in equities. You can invest in small businesses. You can invest in real estate. There's cryptocurrencies, which Anam kind of touched on. But real estate is a great opportunity to provide risk-adjusted diversification because you're investing in a hard, tangible, physical asset. It's something you can drive by. It's something you can see. It's something you can touch. And then there's diversification inside of the asset class itself, right? So just to give you a hypothetical example, let's talk about multifamily. Let's talk about apartments. There's different types of apartments. There's small apartments, there's big apartments, and then there's different levels of apartments, meaning you can invest in a really nice apartment that's new construction or semi-new construction. Maybe it's only a few years old. We would call that like an A-class property. Those types of properties have lower risk because they're newer buildings. They typically attract nicer, higher quality residents. But because of that lower risk, they're going to provide slightly lower returns. compared to, say, the opposite end of the spectrum would be, say, a C-class property, which would be something that we would call like a value add property, where it's in a little bit of a, I wouldn't call it a bad neighborhood, but it's in a more workforce area, a more blue collar neighborhood. It's going to have opportunity for renovations. It's going to have an opportunity to improve the amenities. It's going to have an opportunity to clean up the tenant base. Maybe there's some bad tenants in there when we buy it. And because there's more risk associated with it, the returns are higher than, say, that A class. And then you've got the middle between the A and the B, you've got your C class, your B class. And that's somewhere that's kind of in between, right? So you've got opportunities to diversify your portfolio. Let's say if you were going to invest in, if you had a goal to, say, invest in 4 properties this year or 4 projects, you can say, hey, I want to invest in 1 A class, 2 B class, and maybe 1 C class. So you can diversify your portfolio within commercial real estate, which is, I think, a beautiful thing to provide, again, risk-adjusted returns if you're risk adverse. Or if you're more you're more tolerant to risk, you can say, hey, I want to go all for the C class because I want to make as much money as I can, and the risk doesn't bother me. So it really depends on your personal preference. And then the last thing, last but not least, on the top 3 on my list is the long-term opportunity for wealth creation, which I think it's probably the main reason we're all here. Cash isn't necessarily an issue. We're high income earners. We have money. That's not necessarily the issue, but we're really looking to protect our wealth. And we're looking for long-term wealth creation. We're looking at 5 years. We're looking at 10 years. We're looking at 20, 30 years. Now, typically, our projects that we bring to our investors are typically 5 years. They usually they're 3 to 5 year life cycles. But we're presenting the opportunity for long-term wealth creation because we're improving these properties, and we're forcing appreciation, which we're going to talk about on a slide here in a second. And by forcing the value of these properties, which you cannot do in residential real estate, you're limited by your comps. We're creating true wealth. So we'll talk about this on the next slide. But for every dollar of NOI we create, so net operating income, every dollar of, let's just use the word profit, for example, on a property that's valued in Houston, say at a 5 cap, that could be up to $20 in equity that's created for every $1 of NOI that we create, right? So we're creating tremendous amounts of wealth throughout the life cycle of the project, and we're passing it on to our investor partners that partner with us, and then we're able to benefit from that as well. If when the property sells as the main operator, we take a split of the profits as well. So everybody wins, everybody gets fed, which is a beautiful thing and a great advantage of commercial real estate. So I'm going to move on and talk a little bit about the next slide, which is some strategies you can use for passive income in real estate. And I want to hit some of these ones that are maybe more familiar to you by starting by talking about REITs. And REITs are always a funny conversation to me. I talk to newer real estate investors very often, and one of the questions I love to ask is, are you exposed to any real estate? Is there any real estate in your portfolio? And I kind of chuckle inside sometimes when people say that, yes, I have REITs in my portfolio. And the reason I think that's kind of funny is because a REIT is a real estate investment trust. And essentially what you're investing in is you're actually investing in a company that buys real estate. You're not directly investing in the real estate, right? So it's more like investing in a stock, in my opinion, that is in a company that buys real estate, but you're not actually investing in the asset itself. So you're not getting the benefits. While you may be getting the dividends that stocks provide, like a REIT, right? You're not getting the depreciation schedule that you would get by passively investing directly in an asset. You're not getting the equity and appreciation, which means, again, we're all here looking for long-term wealth protection and long-term wealth building. You're not going to get that in a REIT. It's just simply a monthly distribution or quarterly distribution, just like any old stock, right? So, but that is an option if you're looking for real estate exposure in your portfolio and looking for some sort of passive income. But again, in my opinion, and I'm biased, it's more like investing in a stock than it is investing in actual real estate. The second option for you to invest in commercial real estate and generate some passive income from real estate is investing in a real estate syndication. So real estate syndications are one thing that we do at Headway Capital. And if you haven't heard the term syndication, essentially what it is we pool resources from our investing partners, our private list of investors. We go to them, we present them with an offering, and we pull resources, we pull capital from these investors, and we go out and partner to buy large properties. So the average person cannot buy a 20 or 30 or 40 or $50 million apartment building or a car wash portfolio or any type of large asset. So what we do is we partner with these investors. We bring investors together so that we can all go invest in this project together, buy larger properties. And by buying a larger property, we're providing better risk-adjusted returns, right? So if we were partnering to buy one residential house, one single family house, well, that's not risk adjusted because it's just one building, it's one investor, it's one investment offering, and it has one tenant in it. Well, we're buying big buildings. We're buying 100-unit apartment complexes. We're buying 200-unit apartment complexes. These are large properties, and we're able to pull resources together to go out and buy these properties and provide returns to our investors. So cash flow returns, whether it's through monthly or quarterly distributions. You got the equity upside. You got K1s coming from for tax benefits from the investments that you're getting from the cash flow, and then you're getting the equity upside as well. When the property sells, we pass the profits down to our investors as well. That's a real estate syndication. The other option is a real estate fund. So a fund's a little bit different than a syndication because a fund can actually invest in multiple asset classes, or it can invest in one asset class and have multiple different assets in it, multiple different properties in it. So for example, right now we have a car wash fund open for investment that is actually investing in 8 different car washes. So it's I like to look at it like an umbrella. A fund's like an umbrella, and it has a bunch of different things under it, right? So our car wash fund has 8 assets on it, which funds can be great because they provide, again, risk-adjusted returns. Because you've got, in that example, you've got 8 car washes, right? If one of those car washes, for some reason or another, just doesn't do very well, maybe it's just not performing or something bad happens, and just who knows what happens, right? You've still got 7 other car washes that are there and that are performing, so we can still pay our investors returns, right? So there's risk mitigation in investing in a fund. And they provide different types of benefits and syndications, but they're also very similar, like I said. So funds are a great option too, if you're looking for cash flow and you're looking for risk diversification. And then the last one here that you might be familiar with is crowdfunding. And crowdfunding, you can do that online. It's a way to go in and invest your money on an online portal. So you've got portals like Realty Mogul, you've got CrowdStreet. You've probably heard of these if you've ever invested in anything online. And you simply create an account on these websites and you go and invest in these projects. Now, the problem with these types of projects is typically you're going to notice is the returns are lower because there's a lot of mouths getting fed on those crowdfunding platforms. And also it's going to lack the ability for you to create a relationship with the sponsor. So one of the things we do, and that's really important to us at Headway Capital, is we want to establish a relationship with all of our investors. This is not just like a one-time thing. We want to work long-term with our investors. Most of our investors don't just invest one time. They invest in multiple projects based on their liquidity, based on their comfort level and where they're at in their life cycle. And so you don't get that on a crowdfunding site. You're just pressing a button, you're wiring your money, and you're kind of crossing your fingers. You're not getting to have those deep conversations about the business. You're not getting to have those deep conversations about the asset, about the project. So it's a different investing experience. And in my opinion, it removes the sort of human element of investing, which I'm a big fan of. Being in investor relations, I love talking to people. So it is an option for passive income and investing in commercial projects. But again, it's removing that human element. And in my opinion, removes that know, like, and trust. So you're not quite sure who you're investing in. And in our space, we have a bunch of cheesy cliches, but one of the things we like to say is you're investing in the jockey and not the horse, which is the more and more you learn about this space, is so true. The operator is really, really, really important. You can have this amazing property in a beautiful area that is just primed to make tons of improvements and make lots of money. But if you don't know the operator, and the operator is not a good operator who knows what they're doing, they can easily run that property down the hill, right? So it's important that you know the operator, you get to vet the operator, and that's a little bit more challenging to do on these crowdfunding sites. All right, so I want to talk about a couple of examples, and I kind of highlighted these in the previous slide, but let's talk about 2 examples to kind of give you an example of the benefits of, say, multifamily and car washes, for example. So let's talk a little bit about apartments. So apartments are our bread and butter. We've built a large amount of our portfolio in the multifamily space. It's a space we're very comfortable with. As Anand mentioned earlier in the introduction, we have a property management company, Headway Properties. We manage all the multifamily assets that we own here in Houston, Texas ourselves, over 1,200 units. And we love multifamily. We love everything about them. They're great assets. So what are some of the benefits of multifamily investing? So one, you're getting passive income from a larger asset. So the assets that you're investing in from multifamily space, typically you want to make sure you're investing in properties that are on the larger side. And that's kind of subjective, but I'm going to say at least 100+ units. So anything that's 100 or more apartment units under buildings, that's really what you want to invest in, because that's going to provide income from multiple doors, and it's going to provide risk diversification as well, right? So that's really, really, really important. So you're getting passive income from a much larger asset. You also have multiple sources of income, which is, I think, one of the benefits of multifamily. So not only are you collecting rent, but you're also collecting pet fees, you're collecting parking fees, you're collecting covered parking fees, you've got amenity fees, you've got application fees. So there's different sources of revenue that are coming into multifamily when these residents are living on these properties, so that you're getting some diversification as well, and you're getting other opportunities to improve the overall NOI, which again is the net operating income or the profit. Which brings me to the next, the third bullet point on here, which is forced appreciation. So multifamily real estate or commercial real estate in general is beautiful because we can force appreciation. And that is something that you cannot do in residential real estate. It's not possible. If you've invested in residential real estate or you know anything about the residential market, you know that if you inject $1 million of capital into a $200,000 house, it's not worth $1.2 million. You just have a really nice, really expensive $250,000 house, right? You're really limited by your comps. You're limited by the market around you. Well, in commercial real estate, the properties are valued based on the NOI. So the formula for valuation is your net operating income, so your profit, as I mentioned, divided by the market cap rate. So every market in every city in every state has a different cap rate. So just for example, as I told you earlier, let's just say for every $1 of NOI, if the market has a 5 cap rate, so 1 divided by 5, you would see that you get $20 of valuation for every $1 of improved NOI. So our job as operators is to force the NOI, is to push the NOI. Well, how do we do that? Well, we can renovate units. We can do granite countertops. We can do vinyl flooring. We can do new painting. We can improve the amenities in the gym. We can add community Wi-Fi. We can add smart locks and smart thermostats to our units. We can improve application fees. Maybe the market rate for an application to apply is $25, but when we buy the property, it's only 15 or it's only 20. Well, remember, even if you're only bumping it up $5 on a 5 cap, you do 5 divided by 20, it's a tremendous amount of value that we're creating for just $5 of forced NOI, right? So we have that ability to force appreciation by improving our NOI, which is the best way to do that is to force your income and lower your expenses so that you improve that NOI, which is just a beautiful thing about all commercial real estate. But again, in particular, it's amazing in multifamily real estate. It's a magic formula. And then the last thing about multifamily, which I know I've talked a lot about, is the diversification options, right? So we talked about that already. You've got your A class, you've got your B class, you've got your C class, you've got 100 unit properties, and then you've got 300 unit properties, 400 unit properties. And then you also have different markets, right? I always encourage investors to look in different markets. If you're going to invest in 4 multifamily properties, let's say in 2023 or 2024, well, maybe you want to invest in 2 properties in Houston, and maybe you want to invest in 2 properties in Phoenix. And then next year, you want to do 2 properties in Dallas, and you want to do 2 properties in another market. The key thing to understand is you want to really make sure you understand that market before you invest. Don't just invest in some random market because you think it sounds good. You want to make sure it checks off a lot of boxes, and we can help you walk through what types of boxes those that you want to check off. If you're ever looking at an investment that's not ours, I'm always happy to have that conversation. But diversification within the asset class is totally possible. You're not just investing in apartments. You're not just investing in multifamily. You're investing in different asset classes, different size properties, in different markets and in different areas, which is, again, a beautiful thing about multifamily. Next, got a few slides left here. We're almost wrapping up, but I'll talk a little bit about car washes, which is something we're very excited about. As I mentioned, we do have an open car wash investment opportunity now that we've been getting great feedback from our investors on. So talk a little bit about car washes and why they're awesome. So the beautiful thing about a car wash investment is you're actually not just investing in the real estate like you are saying, like a multifamily property. You're actually investing in the business as well. So you've got a business, and you're investing in the building, and you're investing in the land. So it's the trifecta of investing. And the beautiful thing about car washes is we're getting reoccurring revenue, right? If anybody on this call ever uses an express car wash, which is what we're talking about here, one of the car washes, you drive through the tunnel and your car gets washed, you come through the vacuums, you come out and, through the dryer, you come out and you can vacuum your car. Those are growing very, very, very rapidly in the United States. We're seeing them pop all over Houston, and they're beautiful investments because they have reoccurring revenue, and they do that by selling memberships. A lot of people, I've had memberships before. I know lots of people that have car wash memberships. You know, you pay $15 a month, $20 a month, $25 a month for the gold package, and that allows you to go and wash your car as much as you want, right? So you've got reoccurring revenue coming in by owning that business, which is a beautiful thing. The second thing is their high profit margins, right? These businesses, the express car washes in particular, they have very low labor. Typically, you're only having 2 to 3 people on the clock at a time. They're hourly employees usually. You've got somebody pushing sales, trying to sell those memberships. You've got a person, as you see in this picture here, kind of getting the cars ready for the wash. And then you might have a manager on site, and that's about the extent of it. So you get higher profit margins by running these types of businesses. We're seeing 60+ %, close to 70% profit margins on these types of business, which is great. Again, we're able to pass that cash flow down to our investing partners. We have long-term stability. As I mentioned, the car wash market is growing very rapidly. It's starting to attract the attention of big private equity shops, and they're just growing at a tremendous rate, and they provide long-term investment opportunities because we're typically looking for newer car washes. We're not going and finding old 1990s, 2000 car washes that need $1 million of renovation and all new equipment. We're buying newer car washes, 2019, 2020, 2022, 2023, and they're going to provide us long-term cash flow, which is exactly what we're looking for. And then just like any other commercial real estate investment, they have the opportunity for value appreciation, right? So this is technically commercial real estate. It just has a business on top of it. So it has a similar formula. These businesses are actually modeled on what's called EBITDA, which is earnings before interest, taxes, depreciation, and amortization. Not to overcomplicate it, but these businesses trade on a multiple of EBITDA. So a lot like commercial real estate, if your NOI or your EBITDA, your profit, if you improve it by improving income and cutting expenses, well, there's a multiple that these assets trade at. And the car washes can be anywhere from 12 to 15x or more. So as long as you're able to improve the EBITDA, improve the profit of the car washes, you're going to force that appreciation. You're going to create tremendous value so that when you sell the car wash in 3 years and 5 years or longer, you're just creating tremendous wealth for both yourself and our investing partners as well. So beautiful, beautiful investments. I'll flip it over to Nam to kind of wrap us up here, and then we'll definitely open it up to Q&A.
Thank you, Brian, for that awesome presentation. So I would overall conclude. I think I myself as a physician, I think I completely believe in risk-averse investment opportunities and multifamily real estate so far, as well as this new venture that we've started of investing into car washes. We believe, and we actually have put down a lot of our capital into these ventures. We ourselves invest majorly into each and every venture that we kind of get into. So that speaks for all of these investment opportunities because we are personally invested into them. We need to make sure that they work. And so far we've had excellent outcomes. We've grown really rapidly. Our investors have been very satisfied, and we have an open book policy. I think Brian, Sid, myself, we are very reachable. Our financials are delivered to our investors monthly, quarterly, depending on what kind of investment opportunity you are invested in. And we are here to answer any questions. We are open to feedback. A lot of our investors actually participate into managing, sort of giving their opinion on how to manage these properties. If we run into a hiccup, I have people calling me or my husband or Brian telling us, maybe we should do this, maybe we should do this differently. And, some of those advices work. And I think that really helps you take ownership of your investment and be a part of it, even though you may be a passive investor, but you have a lot of ownership into where you've invested into. So I think that's kind of just concluding these opportunities for you all. If you're interested, of course, please, Brian is gonna send you all a link, and we have a link here as well to kind of sign up for our weekly and monthly newsletters, and we do send new investment opportunities. So those would be something that you'd like to follow. And of course, we're open to setting up a phone call to answer any questions, kind of walk people through these investment opportunities, and of course, discuss any investment opportunity that you're interested in, and if you're interested in investing with us.
Yeah, say any last words here. I want to open it up to Q&A. So if anybody has any questions on anything they saw or just real estate investing in general, please drop it in the Q&A chat. I'm gonna move it over to the next slide, but we're gonna do Q&A right now. I want to make sure everybody gets an opportunity to download our free guide. If you're a healthcare professional and you have not seen our guide yet on the Physician's Guide to Passive Income, I'm going to put the link in the chat. Please download it. Please read it through. It's very thorough and detailed, and I'm happy to hop on a call and answer any questions afterwards. If you scan this QR code, I know it's maybe a little tricky if you're watching this on your phone. You can schedule a call with me, but you'll also get an email after the webinar tomorrow as well for an opportunity to schedule a call with me if you have any questions. But Sid, any final words here?
No, I mean, a lot of information, everything to the point, to be honest. I think for our attendees, just to recap, Headway Capital, Headway Investment is, we own about 40 projects, 40 apartment complexes between, or 42 to be exact, between Texas and Arizona. We have almost about 500 investors, and our asset portfolio size is somewhere around over 500 million, which is almost more than $500 million. And the reason I'm throwing these big numbers doesn't mean anything except this presentation of this webinar is more about for Anam to share her experience, right? So she's somebody who's actively working as a GI consultant, and being very passionate about investor investment, right? So the goal is, I mean, look, you all heard Brian, right? If I let him speak about investment, he's so passionate that he can go all day long, right? But the point really is, 7 to 8 years ago or 9 years ago, when me and Anam were on our webinar just like that, we started our journey from there, right? We took a different path. I got involved more actively, but the reality of it is, you may be on the same stage where Anam was several years ago, right? So the goal is to give that opportunity and we're now expanding our investor base outside our core group, right? But that was never our priority before, right? So, be if it's multifamily, apartment complexes, or car washes, we're now even bringing up our real estate debt fund for our investors. Brian told me not to talk about it because we have not launched it just yet, but we're going to launch it pretty soon. The goal really is to do everything that's possible that what we did for ourselves to create a long-term wealth for our within our company, right? But also to provide the same opportunity for you guys who are just starting up or who maybe have invested. If you guys have invested in the past with somebody with any other commercial real estate investment, we can talk all day long, real technical language, right? We can talk about all kind of operations. I'm an operator myself, right? So we have a full staff of operating team, as well as our investor relation team, investor services team here in Texas and Arizona. And we would love to talk about operations all day long, but the goal really is to maybe one of you guys who just started, right, be able to connect with the journey that Anam, particularly as a physician, took several years ago. And I can get into you. She being my wife, when she's going to work, she's focusing. She's more liberated, right? Because she knows that she can practice on her terms, and she can come back home, not with worrying about another day at work. You know what I'm saying? So that's pretty much it.
No, I do agree with it. I think the liberation, I think financial liberation, not being dependent on your W-2 income. And then also, like, at this point, I don't feel that I have to take that extra call. I have to see that extra patient. I have to scope 2 more patients today. I don't feel that. I don't feel that I need to do that. And that, I think that's very, very liberating. I feel that I mean, at one point many years ago, when I was deciding if I needed a personal disability insurance, I used to talk to my husband. I was like, do we really need it? Because we had, at that point, we had invested into multiple passive and active investment opportunities, and we had some income coming in. But, I mean, I would recommend everybody to get that. But, those are the kind of things those are the decisions that are not important for you at that point. They don't remain as important anymore. But so I think this is something that everybody should look into for sure.
Awesome. Well, we definitely appreciate everybody for attending tonight. I didn't see any questions in the Q&A box. If you have any last minute questions about commercial real estate investing, even residential real estate investing, Sid and I are real estate nerds. We could talk about real estate all day long. I live and breathe and talk my wife's ear off about real estate. So we're always happy to answer any real estate questions. I want you to know we're a resource for you. Even if you don't invest in any of our deals, we're here to answer any questions you might have about investing in real estate. Anam is here to help you understand how real estate can benefit you as a healthcare professional and how it's benefited her in more detailed. If you want to get on a call with her as well. So we're a resource. We have an open book policy. Anam said that several times, and we provide our investors with white glove treatment. We want to make sure your investing process is as easy as possible, and you enjoy working with us so you can invest over and over again. That's really our goal. So I want to thank everyone for attending this webinar. We're planning on having these webinars on a monthly basis. So keep an eye on your inbox for the recording of this webinar, and then look for the invitation for the next one as well. But thank everyone for attending. I hope you have a good night.
Thank you.